Hey, now why are we doing this again?
South, we gotta observe the economy from the highest level possible. You got those permits handled, right?
Wait, is that a plane?
Yeah, it's getting close, but we should be fine. South, are we on?
Yeah, sorry, I'm still shaking off global supply chain week. That's crazy.
Yeah,
I mean,
quite a few days of just freight,
yeah.
nonstop.
Yeah, it's like the carnival of freight.
The carnival of freight is
Yeah.
just happens once a year, and it's just
Yeah.
this huge supply chain.
Yeah.
I mean, yeah, it was, and it was great. And of course, you can catch it all on demand on tv.freightwaves.com. But South, this is Economy Lately, of course, and I'm Timothy Smith, Chief Economist here at FreightWaves, and I'm joined by South Turk, and we've taken some time away. A lot's happened. I mean, there's UFOs, spy balloons, inflation, of course, still being a thing. But there's been a lot that's happened.
Yeah, I know. They even let me drive that train that one time.
That was a mistake.
Yeah,
Anyway,
mistake.
never
Yeah.
again.
Never again.
Maybe a month or two.
Yeah,
We'll see,
yeah.
we'll see.
Choo choo.
But anyway, so we got to talk about what's happened lately. I mean, jumping into it, we had retail sales last week, industrial production, employment. We had the PPI, the CPI. We had all the I's. We got to jump into it. And so let's get started.
All right.
Starting it off with our first update, we have retail sales, which increased 3% for the month. And a lot of folks saw this as good news, as a sign that the consumer is resilient, that you can't stop us Americans from buying and making purchases, and that there is no sign of weakness here in the economy. But South, this number isn't adjusted for inflation. So there's that. And it's going to be measured in dollars. So, if inflation continues to moderate, retail sales go up, things could be, costing more. Also, I don't think this is the best sign for strength in the consumer, because the consumer is just continuing to spend. We already know that the savings rate is near, record lows, or lows that we haven't seen in around 15 years or so. And then the credit card utilization is also continuing to go up. So really, consumers are spending more money that they don't really have. And that's where it starts to get really concerning, because right now, of course, they're leaning on that big thing, the jobs market. And we all know how I feel about the jobs market. So.
Really?
Yeah, I don't trust it. I don't trust it.
It's done you wrong before. Okay.
Yeah, I don't trust it at all. And so that's a big thing. I mean, even when we look at the job market right now and you look at job openings, it's seemingly robust, because there's over 11 million openings, and which is also kind of strange, because there's more openings than there are available labor. And so that's also going to be a thing that the Fed watches. Not that the Fed is going to be increasing interest rates to weaken the job market, but they want to diminish demand for some of those goods and services, and especially those big ticket ones like houses and cars, which cars really did take up quite a bit in the most recent retail sales report. But that's beyond the point. Really, what we're looking at in the jobs market is that industrial jobs claims continues to moderate at a somewhat low level. So we're going to be watching that one closely again this week and in the weeks to come. But this can all suddenly shift, especially as those that have been furloughed or laid off transition from some of those company benefits onto unemployment benefits. And it's going to vary from state to state on whether you can collect company severance package and benefits and state unemployment benefits at the same time. That's going to vary. But once we start to see some of those folks trickle off of those company benefits into some of those state benefits, that's when you can expect to see somewhat of an increase there as well. So, South, the employment market's still holding up, but it's only potentially a matter of time.
To like what? We get more jobs? Is that what you're saying?
I mean, there could be more jobs, but South, I don't think it's going to be the jobs that we're losing. I mean, we're looking at the layoffs that's happening right now. There's a lot of them in Silicon Valley, white-collar jobs, Meta, Facebook, Alphabet, Amazon. You heard a little bit from them as well, unfortunately. And so those are a lot of times high-paying roles when you're looking at, Google and Meta. And so when you're looking at the roles that are open, a lot of them are going to be in hospitality, and some of the services not going to be quite as high-paying. Medical was another one that had some openings that were pretty substantial, but with the exception of surgeons, nurses, and doctors, things like that, those are going to be some of the higher-paying earners, while some of the other roles may not be paying as much. And so really, some of the openings that are available may not be as, profitable or lucrative for some of the folks that just got laid off. The other big thing is, of course, it's going to be that spending. We talk about it all the time. Credit card utilization continues to go up and continues to ramp up. Non-revolving credit continues to go up as well. That's going to be a big concern. And of course, there's that big black hole that no one really wants to talk about or is really watching closely, and that's going to be the buy now, pay later programs.
You know, it's funny. I had a credit card stolen. But I'd already maxed it out, so joke's on them.
I mean, is that credit card fraud if you try to say that that wasn't you that maxed it out in the first place?
You know what? We're going to delete this section, and I might use this as a...
Okay. That's fair. That's
Yes,
fair.
yeah.
This is economy lately, not financial advice or criminal activity. Yeah, bleep that whole thing out. The other big thing that we got was industrial production. That was completely flat, and really it's in line with other updates that we saw around manufacturing. Really what we're seeing overall with manufacturing, we look at the Empire State Index, the Philly Fed Index, the Kansas City, all of them really, they're showing that there's downward pressure happening overall in manufacturing. We're looking at contraction really across the board for the most part, and new orders also suggesting that there's going to be further contraction within manufacturing. The ISM PMI is going to get updated at the first of the month in the upcoming month in March, birthday month, let's go. And so we're going to be looking at that one closely, but right now we're looking at upstream activity. It's definitely showing some sluggish movements here.
All right.
Yeah, so that's pretty much it for, what we've seen so far. Of course, there's inflation, CPI, PPI. We saw some moderation continue for the CPI. The PPI did tick up on a month-to-month basis, showing that there could be some continued upward pressure for consumers downstream. So that's a little bit concerning. And a lot of those companies that have been really maybe taking some hits and having their margin squeezed may be a little bit harder for them to maintain the need for some labor, or maybe they're still hard up for labor. So we'll see how that has to turn out over the next few months here. But really, Sal, that's going to do it for all the updates that we've missed over the last couple of weeks. And in the upcoming weeks, we're going to be looking at, of course, durable goods orders. That's going to be a big one. We're going to have to review what's going to happen with the personal consumption expenditures, CPE, PCE.
PCP, no,
PCE, Sal.
PCE, okay.
That's going to be consumer spending for durable goods. And of course, that's going to have to do with freight, because the more people spend on durable goods, the more freight is going to drive for those consumer goods. So that's going to be one to watch closely that we're going to be looking for in the upcoming week at the time of this recording, but we'll be reviewing that one for sure. And Sal, faux try. We'll see you on the next episode.